In this deep dive, we're going to cut through the noise and take a sober, data-focused look at COAI, what it is, why it moved, what the tokenomics and recent listings mean, where risk sits, and 3 realistic price go-to scenarios to watch over the next 12 months. So buckle up and follow along carefully, because this isn't hype, it's a reasoned forecast built on what's happened so far and what could happen next. First, the basics. COAI is the native utility token for ChainOpera AI, a project positioning itself as a Layer 1 protocol and ecosystem for co-owned collaborative AI agents and apps, combining blockchain tokenomics with incentives for model developers, data and compute providers, and users. That vision matters because it slots COAI into 2 of the market's largest thematic trends right now: blockchain infrastructure and AI tooling, giving it a clear narrative path if the team executes. ChainOpera AI won. Secondly, why the market reacted. Over the past weeks, COAI experienced sharp on-chain and exchange activity tied to high-visibility listings and liquidity events, including a major listing goal launch on a top exchange that materially widened access and volume when an asset moves from low-liquidity listings to a venue with global reach. Price dispersion tightens and volatility spikes because retail and derivatives desks can now trade it at scale. That listing created both the immediate squeeze higher from demand and the aftershock of large short-term sellers looking to realize allocations. Binance. Third, the tokenomics context. The white paper and tokenomics documentation describe COAI as a utilitarian token with allocation schedules and unlock cliffs that matter to price sensitivity. In token launches like this, the mechanics usually dominate short-term price action. Circulating supply increases from scheduled unlocks and utility adoption that converts idle tokens into usage. Staking, fees, rewards which can soak supply. Early markets often misprice the timing and size of unlocks, so track the token distribution timeline closely, because big scheduled unlocks are classic dump catalysts even when fundamentals are sound. ChainOpera AI. Fourth, market structure and indicators. Looking at on-chain and market data, volume surges, concentration of holders, exchange order books. COAI has displayed the typical pattern of a newly listed, narrative-driven token: periods of explosive percentage gains, huge daily ranges, followed by sharp retracements as profit-taking and derivatives liquidations occur. Such behavior suggests high beta relative to the broader market, meaning COAI can outperform to the upside in risk-on phases and underperform dramatically in risk-off conditions. CoinGecko 1. Now, let's move to the prediction framework. It'll give you a baseline approach and 3 scenarios: bull, base, bear, each accompanied by triggers and approximate price ranges, plus the probability factors in weighing based on present data. Scenario: a bull case, 20% probability if execution and macro align. COAI becomes the de facto token for a set of popular AI apps or a marketplace that meaningfully uses COAI for payments, staking, or compute access, while the broader crypto market is risk-on and liquidity remains abundant. In this scenario, network activity increases steadily, daily active users and transactions march upward, large third-party integrations are announced, and the team follows the roadmap with timely releases and partnerships. Exchange liquidity deepens without disproportionate concentration in a few wallets, and token unlocks are absorbed by demand or gradually state-distributed rather than immediately sold. Under this outcome, COAI could reach and sustain prices multiple times higher than early post-listing levels over a 12-month horizon as narratives and on-chain fundamentals reinforce each other. Scenario B. Base case, 40% probability. COAI settles into a more volatile but realistic pattern where it's recognized as a promising project but struggles to deliver immediate, network-scale utility. Here, the token trades in wider ranges, with periodic rallies on product releases or listings and intermittent pullbacks whenever market sentiment turns. The tokenomics schedule means supply increases at predictable points, causing temporary price pressure, but core investors roll with the project. Adoption grows slowly, partnerships are incremental, and while COAI doesn't immediately become a mainstream token for AI compute, it carves out a niche and survives as a mid-cap project. In this case, prices will likely oscillate, and any long-term upside depends on steady execution and adoption milestones. Scenario C. Bear case, 20–40% probability. COAI fails to materially convert its narrative into sustainable utility, or adverse token unlock schedules plus concentrated large holders selling into retail demand lead to heavy downward pressure. Alternatively, a broader crypto drawdown or regulatory risk could remove liquidity from risk assets and trigger cascades. Under this scenario, the token could retrace a large percentage of its initial gains and trade back toward pre-listing levels, with only a long, arduous rebuild restoring trust, requiring deeper discounts for new buyers and a fundamentally slower roadmap. Those 3 scenarios give us a probabilistical map. Now unpack the levers that will move probabilities: 1. Product adoption and real usage, retention, and gross value of transactions using COAI; 2. Token supply management and size of unlocks; and whether the team or large holders choose to sell or lock of its tokens. 3. Exchange and market structure with liquidity becomes diffuse or remains concentrated across a few platform stores, and for macro risk appetite, the market pivots risk off. Newly listed tokens are usually the first to correct. For immediate tactical signals to watch over the next 30 days, monitor exchange order book depth and aggregated 24-hour volumes. Sustained high volumes on major exchanges imply real demand. The project's official product release cadence and developer activity GitHub or ecosystem commits if public. Number and scale of partnerships or integrations, particularly integrations that require actual COAI flow, and announced token unlocks or team vesting schedules. Any one of these can shift the price trajectory quickly. Regarding valuation, avoid the trap of trying to anchor COAI to a single dollar number without context. Early market tokens are priced on expectations of future utility rather than present cash flows, so a more useful approach is to model adoption. If COAI captures 0.1% of a hypothetical multi-billion-dollar AI API compute market as an on-chain settlement token, token utility and thus intrinsic demand would support meaningful appreciation from current levels. If it fails to capture that share, upside evaporates and price is left to speculative flows. Now, a couple of pragmatic trading and risk management guidelines for listeners. If you're a short-term trader, tighten stops and size positions to reflect extreme intraday volatility. If you're a medium-term investor, build positions over time, dollar cost averaging, and allocate only capital you can afford to have locked for extended periods, because even fundamentally strong projects can be dragged down by macro shocks. And if you're a long-term holder, focus on roadmap milestones and on-chain usage growth as buying signals rather than price pumps and FOMO. Never forget liquidity risk. Liquidity can vanish fast and slippage can destroy returns on large trades. Check the largest holder concentration metrics and ask whether a meaningful portion of supply is held by insiders or whales who might sell when price spikes. On regulatory and systemic risk, AI tokens occupying utility niches are not immune. Increased scrutiny on token launches, securities classification debates, or changes in exchange listing policies could impact COAI's market access and valuations. Keep an eye on compliance statements from both the project and major exchanges listing the token. As for catalysts that would materially raise the bull probability, are large, reputable partnerships where partners actually route fees or payments in COAI. Be the launch of a performance marketplace or compute layer that requires COAI and demonstrates clear demand. See cross-chain bridges and wallet integrations that broaden addressable liquidity without compromising security. Conversely, red flags that would push toward the bear case include repeated missed roadmap deadlines, evidence that token allocations were priced into retail at listings, significantly dilutive unlocks that were not previously communicated, or any security incidents that erode trust. Finally, a concrete, conservative prediction for planning purposes. Assume a baseline path where COAI will continue to show high intraday volatility, with multiple 20-50% moves both up and down in short windows. Absent major adoption headlines, treat roughly half the recent post-listing premium as contingent and vulnerable to reversion, while long-term upside depends on steady utility adoption that could take many months to materialize. In plain terms, COAI can be a multi-bag if ChainOpera AI delivers on meaningful product usage and demand for token-denominated services. But it's equally plausible for the token to decline substantially if token unlocks, concentrated selling, or a market risk-off shock occur. Position sizing, stop losses, and a focus on on-chain product metrics rather than headlines will be the difference between catching the trend and getting burned.